Okay, welcome in, you trader nerds. Hope you had a fabulous weekend. Weekends get in the way of our trading, daggett. So I was really glad that we are open back up and ready to go. Check out our little overnight high here, right? This should serve as some point of what do you call support. It just is what it is. Now let's see if we've got would we call this a gap and go, or is this pretty much just a regular old day? Oh yeah, this is pretty much just a regular old day. Yeah, I mean it's just strong, it's strong here, but no big deal. All right, doesn't really matter which way the market goes, we do our thing anyway. All right, so let's go with our Tastyworks count and let's see what our balance is. And it looks like things have been down a little bit today on our balance. So I was trying to think why, and I can't really figure out. First, let's look at the VIX. Let's see what the VIX is. So the VIX today is up a bit. That's why we're down, y'all. That's why we're down just a little bit. Is volatility has increased, even though, well, it looks like it's a down candle though, doesn't it? Down candle, but well, it ended here. Right, so this is the candle here, so it did it here. So even though it's a red candle, VIX is up a little bit. So that's why we're down a little bit today. It's a volatility issue. No big deal. No big deal. So let's see how our little count is going. Oh! I wanted to show y'all this. I got my account laminated and all that kind of stuff today. And then when I got there, I didn't like it. I was like, no. We are going to do the 28-pound paper. We're going to do 28-pound paper, and we're going to spiral bind it with metal spiral. I don't know how much that's costing, but I did that at Staples today. So they said it'd be done in a couple hours. So I need to call Beth to pick that up when she's in town. She's going to the Chinese restaurant with my son. They had to go to the what do you call orthodontist. All right. Do y'all know how much braces are nowadays? Unbelievable. Just unbelievable. I mean, that's what we should have done. We should stop trading and we should be an orthodontist. I think I'm going to just put me a sign up that I'm an orthodontist. All right. So what was I doing? Oh, yeah. How much is our count up or down today? So let's go see. And we are at privacy mode. We are at 37,780.58. 37,780.58. So that's down a little bit. No big deal. Tastyworks count. 37,780. Now we're at 779. It just keeps going down. Here we go. 37,779.96 in that account. Today is the 9th. So we're down $104. We're up $99 on the year. Okay. Greeks and ratios. Let's go grab them. Grab them and grab them. Oh, and I need to make a very big distinction. The triple nipple donkey is not a trade. Y'all need to know this. Listen to my words. The triple nipple donkey is not a trade. The triple nipple donkey is a campaign. There's a difference between a trade and a campaign. A campaign combines one or more trades in an orderly progression, right? A trade is the 1-1-1, or as we like to call it, the one-eyed frog and the Sweet Bobby Hedge are separate trades. If you combine those together into a campaign, it's called the triple nipple donkey. Okay, so let's see what we got here. We got 9 deltas, 11 theta. Ugh, 9 and 11. That is terrible. 9 deltas and 11 theta. We got to get more stuff in here, y'all. This is just terrible. So let's update all this, update this. Okay, so our buying power usage is 517495. Is that right though? Or is that the same thing we had the other day? 517495. Yeah, that's about right. 5174.95. So remember, if, ladies and gentlemen, you have all greens or you got a blue in here, you must put on a trade if that's in your trading plan. That is indeed in my trading plan. I must put on a trade. I do not have a choice. So what do? I'm going to do 2 trades today. Okay. I'm going to do a one-eyed frog, which is part of the triple nipple donkey. So my one-eyed frog is here. So I'm going to go closest to 60 days without going under, because I want 60 days on my put debit spread. So I'm going to put me in a 50 wide put debit spread. And I'm going to move him down. And it gets a little hard when we get into these areas with all the, but we probably won't get into that today since the market's up so much. Yeah, here we go. 1025. There's 10, there's 975, 3660, 3710. Let's buy that for $10. Shall we? Shall we? And we are filled, right? Then what we're going to do is we're going to go out to closest to 90 days. Doesn't matter if it's over or under. And at 90 days or the 81 days, we're going to sell something about in the 12 delta, right? 12% probability being in the money, right? 11 or 12 delta. So let's bring us in. I'm going to be a little aggressive today. I'm going to actually use delta, and I'm going to use 29.25 because I need theta. Closer I get to this one standard deviation line, the closer I get to the at the money price, the more data, the more delta that I get, the more theta that I get. So let's try to get some theta here. 34, let's do 3,500 and get over $30, shall we? Mid price, we're going to sell one there. Boom. That's our one-eyed frog or the 111. Done. I said that's our one-eyed frog or the 1-1. Here we go. And Jack spot crap. All right, let's go to our working orders, refilling, replace the order. Georgia is playing in the national championship today, and order rejected, no runner because it already got filled. Okay. Now, here's what I found out. All of my groups are messed up in the other one. And the reason is because they're messed up because I've been putting the same strike for the Sweet Bobby Hedge as the one-eyed frog or the 111. I can't do that. So what we're going to do is we're going to do a different strike, right? So 3,500, God, that's where I should have put my Sweet Bobby Hedge. So I'm going to go around there. So we're going to say like the, I don't know, 3510 or so. Let's go back to that, or 35 something, 3510. 81 days. Now, this is the second trade. The second trade is a black swan hedge, a Sweet Bobby Hedge, right? So we're going to sell the 32. I like that. So I want to make a different strike because I want to group these separately in the other account. So we're going to sell this one. Now, here's the only change I made in my trading plan. And don't beat me up. I told you I wasn't going to make a single trade change this year, and I'm not anymore. It's done. I'm done. But what I've done is instead of doing a 1-2 Sweet Bobby Hedge, I'm doing a 2-4 Sweet Bobby Hedge. Well, you say, why, Bob? Well, let me show you why. With a 1-1-1, we have one naked put, right? We got one naked put with a 1-1-1. With a Sweet Bobby Hedge doing a 1-2, we have one naked put, right? So that's two naked puts, and then we have two long puts. So that's two nakeds, two longs. And I was like, well, crap on that. That'd be huh? I was like, if we're going to do a 1-1-1 with one naked put, then let's do a 2-4, right? With two shorts and four longs, so that we have three shorts, right? And four longs. That makes sense to me. So let's do that. So let's do a 2-4. So we're going to go 3510, I guess, and we'll sell that 2 times. I said we'll sell that 2 times. I said, there's it. Okay. Why can't I sell that? Why would it not let me? Oh, it's because it's got a sell sign right there. Okay, let me clear this. Okay. Sell the 3510, right? Now, also another change that I made was this, and I need to show it to you, I guess, in my plan. Hold on. So I'm going to sell 2 of those. I see it. I'm going to sell 2 of those. 2 of those, right? 2 of the 3250s. And boom. Now look at my theta when that fails. Come here, baby. 32. Let's see. We're going to have to go for 32 1/4. Let's try that. 2 of those. All right, filled at 32 1/4. So you need to kind of use your calculator because I was spent a lot of time in the lab over the weekend working. And if you don't use your calculator, you might pay too much, right? So we got 2 tranches. It's been a 2-4. So we're gonna have 2 shorts and 4 longs. So we fill that for what was it, 32.25, right? So under ordinary circumstances, we're going to take that down to $1.94. So what can I buy my loans for and have this thing still be profitable? If I harvest at 94% where I normally would and have a $46 profit. So I got to figure out what I'd have to pay for my loan. So make sure that you're getting this for a credit. Now I should have done that. I should have done the whole strikes before I put it in, but let's see what we're doing here. So I sold 2 of the 35 10s. So I got to go down 10, 20, 30, 40, 50 to the 34.60. But we're going to go down about 30 days. So 34.60. So 30 days down is about what? So 67 minus 30 is 37, right? So now I done forgot the darn strike. I sold the 35 10, so the 34.60. So let's go do it. 34.60 at 39 days, 34.60. 34.60 for 850. Okay. And then we would be buying 4 of those, right, at 850. So let's see what that looks like. So if we're buying these for 850, will we do the whole trade for a credit? Is that right? If I sold these for, let me see what I sold them for. That's pretty good, right? Make sure I'm 30 days down. Hold on a minute. We did that. Oh, no, we did that 81 days. 81 days minus, it'd be the 50s. Sorry, y'all. Yeah, geez, you think I know what I'm doing? I have no idea. 34.60. I started to say, God, that was good. Bobby, you did good. 12.25. All right, let's see what 4 of those look. Clear my orders. 12.25. See if that's for a 12.25. 12.25. Come on, baby, make it be a credit. Oh, yeah. Oh, yeah. Bobby, you're brilliant. So let's go buy 4 of those, the 34.60s, 12.25. We'll try to do 12 because we're greedy son of a guns. We don't want to overpay if we don't have to. 2, 3, 4. 34.60s and shawaka. Boom, baby. Boom. All right, questions. Bobby, what's all that crap look like? That's a good question, isn't it? Let's see what it looks like. So let's go into our, what do you call, curve. Let's look at our positions. Let's look at our, now this is going to look really bad because this is just my nakeds. There's nothing out here but nakeds. So if you look at those in the 81 day, that's going to look really, really bad. It's going to look like this. Show you what it looks like. Trade curve analysis. It looks like this. Well, it don't look that bad, right? It looks like we're in the profit zone. But as we scale out, it looks bad because you see at this, 2 standard deviation move on the 30-day cycle, you could rack up some really, really big losses. Right? But we're well in the profit zone here. So losses could come here. But what do? Let's look at our other things that will offset those losses. So we'll go to positions and we'll look at these little buddies. And not just you and not just you. We'll look at everything. Make sure I got them all here. 123. No, I want today. Sorry. All right. So today that looks like trade curve analysis. This looks like, there's all my stuff. Hold on. Sure. Oh, here analysis. There you go, Bob. Oh, Bob to Bob, Bob to Bob. So everybody see how good this looks? Look at that. We have something here called Profit Mountain. And we want the price to eventually start going down, start getting some of these little puppies in the money so that we can eke out just a little bit of that. But this is a great, great, great hedge. Look at there, y'all. P&L expiration, if we went to the top of the mountain, would be $6,800, $6,836. Y'all remember that. That's at the 33.40. 68.36. Let's go get those other ones. 68.36, 33.4, 33. Was it 33.40? Yeah. Let's go get these, see what the others look like. At 33. God, I done forgot it, y'all. What was it? 3340, right? Let's go to the 3340. So if we went to the 3340 here, we would have losses of at expiration. Today would be 7,000, but at expiration it'd be down 1,900, right? So you see, if we went down 1,900 down plus 6,800 up, you see how that kind of works, right? To give us an additional buffer to the downside. Question: what was the expiration of the 3710, 3660, 50 wide? It should have been, if I did it right, it should have been that probably 67. Put debit spread at 67. Yeah. All right. Questions? Everybody good? So that's kind of those two trades together, not just together. If you do those trades together, you have not done a triple nipple donkey. The triple nipple donkey is the expiration date. Let's see, March. Let's see, March the 17th. Right? Yeah, March 17th. All right, so let's go and let's do it in the other counts. Let's see how our little counts over here are doing. If VIX is still up, we're probably down in those accounts. Volatility hurts us to some extent, but don't worry, it all comes out in the end. Everything kind of comes back down. So we've got our thing done here. We got everything done. Okay, let me just close the spreadsheet, get it out of our way. We don't need you anymore, little spreadsheet. Now, everybody's got the tools. You should have the spreadsheet. You should have the trading plan. You've got everything. There's nothing that you don't have to trade this strategy. And make it your own. Don't listen to me. Do your own stuff. So let's go over here. Well, let's see what we're looking like. So over here, my stuff looks like, what the crap is all of this? Oh, I was showing all my positions. All right. So let's see how we're doing. This is the Bobby Beth. This is the big account, right? The 100-something thousand. So we're at 107,297. Okay, 107,297. So we're going to be down a little bit in this one as well. 107,297. 107,297. Oh, Bob. Here we go. Ain't going to be no Jeffersons today, dang it. 107,297. Hey, Georgia plays the One-Eyed Frogs tonight. So, what should I do? Who should I pull for? I live in Georgia, but my favorite trade is the One-Eyed Frog. And if you're playing the One-Eyed Frogs, I'm kind of like a frog today. And then, this is what's made me so mad. They sent a little thing out today telling all the kids at the elementary school to wear their red and white today. My kids did, but it's because that's our school colors at the little school, not because of Georgia. And I said, do not indoctrinate my kids. Roll Tide. That's what I told the principal. I said, don't you be indoctrinating my kids. All right, so we're down $106 today. Wang. We are up $339 on the year. That's plays enough to play the Jefferson.
We're moving on now to the side, to a deluxe apartment in the sky.
All right, so we've got 11 deltas over here and 18 theta. 11, 18. It should be a good game. We'll see. Georgia should win it. No big deal. I go to church with these people. They're a special kind of person, no doubt. All right, so 12,336. 12,336 on the buying power. All right, y'all. I don't have a chance. I don't have a choice. Yes, I did, Matt. Isn't that good? And now we go. We're not in the football school anymore. We're just we're basketball school at Alabama. We whoop Kentucky. That's how people feel when they whoop us, right? It's like, yeah, we beat Kentucky. I bet we didn't storm the court, did we, man? I didn't say the storm. No storming of. Where was the game? Hopefully, I don't know. All right, so what are we doing here, y'all? We ain't got no theta at all. I mean, I have got to do something. This account, I cannot. All of last year, I could not keep enough theta in this stinking account. I mean, I've got to do something. I've got to do something, y'all. I mean, I don't want to on a day when we're up 1.3% to do 18 tranches, right? But I gotta do something. I think I gotta do 2 tranches. I mean, I got no theta. Look, it's gone. So let's do 2 tranches. And then I'll wait and do 3 or 4 on a good down day. All right, so let's go over here to the trade tab. And let's pull up our mucus trade, our MES, mucus for short. All right, there we go. Come on. Here we go. And boy, everybody's keep coming in. Didn't rush to court. It's expected. Exactly. We don't rush courts. We don't tear down goalposts. We don't do that garbage that most people do. All right, so let's do our put debit spread first, shall we? I want at least 60 days without going under. So that was the 37.10, 36.60. 37.10, 36.60. Now, y'all gonna have to help me on all this. 37.10, because I'm about to go, okay, I'm doing 2 tranches, so that messes everything up. 37.10, 30, 37, 37.10. So buy the 37.10, and we're gonna sell the 36.60. Right? Don't play moving on up. It's expected. Matt, don't play moving on up. It's expected. Oh my God. All right, so let's do our thing here. So I said 2 tranches of everything, right? So let's do 2 tranches, not 980. We know we got to go make that 10. Why don't y'all fix that? Thinkorswim. Because we know y'all are never going to touch this platform again. Y'all probably never make any changes whatsoever. So it's going to cost me $105. Okay, we're in. There's my put debit spread. This gets a little complicated, y'all. So now I got to go sell my naked put. So we're going to do that at closest to 90. Doesn't matter if you're over or under. And we like about that, you know, what do we do? 3,500 on the other account. So if we're going to do the 3,500, yeah, 3,500. So let's sell one of these. I see it. Let's sell one of these. Let's try to get 31 for it. And 2 tranches, right? 2 tranches, yeah. 31. Come on, baby, get me in. I said, get me in. Having mouse problems. Come on, baby, feel. Hold a minute, let me try that secret stuff that I've been reading. I am open to the wondrous possibilities that befall me. Bunch of garbage. The Secret. New York Times bestseller. Bunch of garbage. All right, let's go 30.75. All right, so there we go. 30.75. All right, so we're in that. Did I do 2? Yeah, 2, 2, and 2. So that's good. So we got that in. Now, why don't I go ahead? I know I need to do that in the other account too. So let's go ahead and fill those in the Crimson account. Let's go back to this account and let's just copy those orders over. Now, in the other account, I'm probably not going to do 2 tranches because it's a $28,000 account. So what I'm going to do is I'm going to do the same, and I'm going to do it in 1, right? Create a duplicate order, and I'm going to reduce this to 1, and then we're going to go here and go to the Crimson account, Crimson, and send, and boom, shakalaka, shakalaka, boom. There we go. There we go. So I got my naked in. Now let me do my put debit spread. Go back to the Bobby Beth account. And I don't know how y'all follow along with this. I understand if somebody's sitting here, you probably turned off by now because you're like, what in the crap are you doing? All right, so create a duplicate order here, right? So we're going to do 1 tranche. If that fly, don't leave me alone. All right, gosh, where are you? Right, here we go. 1 tranche, confirm and send. I'm going to put this in the Crimson account. Crimson for the Alabama Crimson Tide. And fill me, baby. Okay, good. All right, now we can go back to our big account. We put our Sweet Bobby Hedge in. Now, since I did 2 tranches, this is going to need to be, y'all help me with this. I did a 2-2-2. So this has got to be not a 2-4, but a 4-8. Is that right? Is that right? Did I do something wrong? Yeah, 4-8. I got to do a 4-8 here, y'all. Unbelievable. I'm not used to this. Well, this feels like too big for me. You know, that's what she said. All right, let's go with that. So here we go. We're going to do a 2-4, but now we're doing 2 tranches, so it's a 4-8. So we got to sell the 35.10. Do an ES. Do an ES. And Ed, will you get back with your group, Ed and y'all get to y'all's concert schedule? Oh, by the way, Ed and Ed will be performing when we are in Atlanta in May. I got to check on those hotels, by the way. So we're going to sell 4 of the 35 tens. 4 35 tens on the hedge. Whoa, that's big, y'all. Look at this. Sitting there going, Bobby, we even got the buying power to do 4 of these things. Unbelievable. I'll be still. Okay, there's 4. If this doesn't work, y'all, we're in trouble. All right, then we're going to go out to the 50-day. I'm going to do the 3460. 50-day. And we'll do the 3460 for 12 something, right? 3460, yeah, 12. Okay, and we'll do 4 of those. So we got to do 8 of those. 4, 5, 6, 7, 8. Right? 4 and 8. Okay, boom, chuckalaka, chuckalaka, chuckalaka. Why until at least a month has passed, Ken? Why you gotta wait?
We're getting a new church. We don't know where, so we may be moving.
Oh, is it gonna be in Georgia or do you know?
I don't know what it is the decision has been made. And pardon me, folks, but I don't know if any of y'all are.
It must be Methodist or something.
We're Methodist, United
Yeah.
Methodist, but we're going to be United Methodist no more, global. And we
Oh.
haven't quite got it. Decisions made. So I got the missus has got to tell me what to do, which is usually the case.
Yeah.
And also, I'm having surgery this year, and I don't know when it'll get scheduled. That's cataract surgery. That's a couple days, and then you wouldn't know what to do with me. And so that's it. I just can't commit because until then. But my intentions are to go. And if
Hey, how cool would it be if you got moved into my town? Would that not be wild?
well, are they going to? You got some Methodist churches going global?
I don't know.
Because we're
I
looking
think
in that
so.
area. Manchester's got a huge church.
Hey, we played Manchester in football.
Oh, you guys, I can't do that. I got to be on the state champion side, just like I'm on Georgia's side. Go Dogs. I have to balance you out there, Bobby.
Oh, I'm sorry. I don't think we got any Methodist churches in our area. Yeah.
I bet probably not.
Ah.
But you know,
Oh.
with global, it can be anywhere. I'm gonna go back to Florida, and that's the old side. And but when you're in this life, you go where you need to go.
Oh yeah, I understand. That's just part of it with the Methodist church. I would tell you, every time you start a Methodist pastor at the church over here in Ranburne, Alabama, I mean, next thing you know, he'd be gone. Just like as just a minute that you was used to it, and you're like, oh, unbelievable. And then you have somebody else come in, and then you get used to them, and they send them somewhere else.
Well, that's the idea. The idea is the minister isn't your leader. He's not your friend. He's a servant. And so it's the itinerant system, and it's gone on since there was Methodism. There's a positive side, but unfortunately, there's a negative side too. And right now, the pendulum swung, and there's all kinds of outrageous stuff going on. And this is insane because it ain't supposed to be about your minister or your denomination or any of that nonsense.
Yeah.
And so anyway, I apologize. They get too churchy.
No,
It drives
that's
me
fine.
crazy getting too churchy. Well, the other folks, they may say, get this conversation out of here. But I want something else to say. I implemented the spreadsheet on November 1st of last year.
Mhm.
What is it? November, December, halfway through January?
Yeah.
18% profit.
Oh, that's amazing.
2.5 months. For anybody
Excellent.
listening to this, the reason you haven't seen my trading plan posted on the board is because I'm rewriting it.
Oh, wow.
Okay.
Mhm.
Yeah. And so this is for all you guys out there crying about how much you got to pay. This is worth the price of admission 1,000-fold. It
Well,
works.
thank you, Ken. Yeah, I think we got a great program. I mean, I really do. And I know it's hard listening to the videos, and I know that I've got ADHD, and I meet up with all kinds of stuff, and but if you'll stick with it just for a little bit, a couple weeks, you'll be fine. You'll know exactly what you do. You won't have to watch the videos anymore. It's just easy stuff. We do the same thing over and over and over. So I wanted to show y'all about the risk on this account. So thanks for sharing that, Ken. And I hope y'all go to a place that you're really happy about. I really do. I know. So here, right, this is our entire positions. Let's do today's date. So it looks really bad. I know it does. If we were to go, this is all my positions, right? All 6 hidden simulations. This is all my MES positions. So this is a $108,000 account. If we had a 20% correction, now you see we're starting to build this up though. And when we looked at this last night, was this not like 40 something thousand or so, 47,000? I think it was. Ed's probably rehearsing with his band right now. I think he and Don Kaufman are Ed and Ed. So $16,000 if we go down. Now you sit there and go, wow, that's going to be $50,000 of buying power. Okay, well, my account can handle that, right? With a $107,000 account. So that looks bad. So, but that's not including what happens with volatility. So it's going to get worse, but let's see if we're going to be blown out. So if we have a 20% correction, what's going to happen? You know, I'm down $40,000. I think last night this was 47,000. So you can see these hedges become pretty darn powerful, right? Now, let's also look at what happened with our theta today, because we did put hedges on, but what happened to our theta? Our theta in this account, our theta in this account went from what, 11 to 14. So we did increase our theta. Now, it would be nice to see what happens to our theta as time goes on. I would expect this to get bigger. How do I know? By raising, let's draw you a little circle around it so y'all can see. Keep in mind, this is theta. Oh, Lord, that's a big old thing there. All right, so let's go back and now let's advance the days so we can see what happens to theta. So tomorrow, 1274. Now, see, that's what happens sometimes with the hedges. Now, you'll notice in a couple of days, this should come and be back up, though, right? So we popped up our theta. And it says that theta is going down. Right? Uh-oh, you're down 11, down 18, down 27, down 37, down 16, down. Here we go. So you got to go a few days before the theta starts kicking back in your direction. That is kind of normal with this trade. Now, to go back to Mr. Bertino and what he said, we know that we have a phantom or fake Vega at those expirations that are out, 80 something days where we're putting this trade. But we also have fake negative theta to speak as well. Because when you look at this, you look at that hedge that we just put out, it looks like it's negative theta. But if you look at the whole, let's see if we can isolate the hedge, the 4.8 that we did today. See if we can isolate him totally. Let's go back to one expiration and let's go find him. So where are you, Mr. 4.8? 4.8. So there's 4. I think that's it. 34. No, that's not it. That's it here. So there's our 8. So let's take everything off except him. The 3460 and 4 of the 3510s, right? There's probably this last one over here. 4 of the 3510s are down here. There you go, 3510. Yeah, so let's look at our hedge, right? So if you look at this, this is the hedge we put on. You see it's negative theta, right? Here's where we need to look though, right here, right? So let me go back to today. Yeah, here we go. So here we are today. And today you are, you got theta of negative $7.37, right? Everybody with me? So what happens as time goes on? If we were to stay at this place, it says we're down $115 today. That seems strange, already down $115. But if you stay here, this trade's going to be up $25.75. If you go up 5%, you're going to be up $128. So as long as things go up, it's fine. The problem with the Sweet Bobby hedge is the valley of the shadow of death right here, right? Valley of the shadow of death. But as we continue, with our days. Let's just watch what happens to our days. 1 day, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Do y'all see any problems after 20 days with the Valley of the Shadow of Death? No. And look at your deltas or your theta. That fake theta is getting less and less. So it's about to go up. So that's 20 days, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. So we're 30 days in here. Now, 30 days is about where Ed is going to start taking his off, right? Ed's going to start taking his off. But do you see a Valley of the Shadow of Death trouble here? You don't, do you? You don't. Now, the problem is, as we look at that, is are you going to be able to take it off? Because those 4 at 35/10 that we put on at 80 days are now at 50 days. So let's go look at our 35/10s. At 50 days, right? Here's 30 days. The 35/10, you're probably not going to be able to harvest it for a good profit, right? So at 35/10, that thing is only at 1575. So, I would not harvest there because I've got to let it go a few more days. So let's see how many more days we can go. So what's our next expiration?
Hey, Bobby, I have a question for you and Ed real quick.
Yeah.
You said that he's taking it off in 30 days or at 30 days. If he puts it on at 80 days, is he going to take it off at 50 or is he going to take it off at 30?
Oh, that's a good question. He's going to take it off at 30 days left. Is that it?
Yeah, I'm looking at taking it off around 25 to 35 days.
Okay. Okay.
I haven't pinned it down, Bobby, because just like you, that analysis just then was great.
Yeah.
I don't want to even flirt with the Valley of Death on any one tranche.
Uh-huh.
So, that's kind of where I am now, but that's not laminated.
I got you. And I've got mine wire bound today. My trading plan, I'm making no changes. Winky winky for the rest of the year. We'll see. Nick says, why does it have negative Vega for a hedge? Exactly, right? You think it wouldn't work. Nick, listen to me. In 2020, my friend and I, no, actually it's in 2019, my friend and I invented we invented. Well, listen, all we did is take Ron Bertino's thing, his 3-5 hedge, and we diagonalized it, something that Ron didn't do. And actually, I'm going to give my friend more credit on it because he said, this is a no-brainer. And I said, it's the most idiotic thing I've ever heard in my life. And we would go to the Analyze tab and I would be like, it's got negative Vega. It's not going to work. This is the most horrible trade ever. But he said, look, Bobby, look at it, though. What happens in a crash? And I looked at it and I go, okay, it looks like it worked. And I put them on by the boatloads. And I'm telling you, I agree with you. It shouldn't have worked. It's got negative Vega. It did. Which led me to believe that Ron Bertino, as much as he hates my guts, is correct. There is fake Vega out at those longer dated term options that the Black-Scholes model simply cannot pick up.
I want to butt in here.
Yes.
But Bertino didn't invent this at all. This comes from Taleb Nassim from his book, Dynamic Hedging. Okay, it comes right out of it. And if you go to that book, chapter 7 or 9, I can't remember which, there was a whole chapter on Vega and volatility. And he gives you a formula to help you figure this out. And the nub of it is Bertino's right. That's fake Vega because we use the square root 1 over the square, 1 over the square root of t to factor is scale the Vega and also the scale the actual loss. Because when you're all the software, Thinkorswim, Tastyworks, everybody seems to use the Black-Scholes model, and this is important. It's always, always, always at the money. And we know that the behavior in the money and the behavior out of the money is not the same as the behavior at the money. So we're looking at bad models on our analysis tab. And that's the only negative thing I can say about any of this stuff, because I really love Thinkorswim. And Tastyworks has finally come up to a place where I'm happy with their analysis. But It's just the computing power would be unreasonable if we were to recalculate the Greeks for every strike that they're at.
Yeah,
I'm working on a spreadsheet where I'm going to type in the values and give me the real Vega, give me the real Delta to see what to help make decisions, because that infuriates me what you're talking about. It infuriates me because, well, I was a trained scientist in the 80s, okay, and you just can't do science that way, and it just
mhm.
I can't handle it. It's why I do drugs and take and drink. I'm just kidding. But anyway, take it to the bank. Vega is false from the model.
Yeah.
And Talib Nassim gives you the formula so you calculate what your real Vega is. And believe me, it goes from having a really deep, tight pucker factor to you relaxed. It really is. So anyway, soapbox mode off.
That's fine, Ken. I appreciate you sharing that. And yeah, you're right. And even Talib didn't invent the particular trade, because all it is a put back ratio spread. That's
That's
all it is.
Yep.
It's a put back ratio spread, Joe. There's nothing magical about it.
I
So
want to say
let's-
something about
yeah.
that too, Bobby. I hate to interrupt you, but
no,
this
you're
is
fine.
very passionate. We need to, in your own thinking, you don't need to, but it's a good, I did, and it's good, is to cultivate the thoughts and the habit of morphing your trades. And Bobby said it right. The class of trades that we do is basically it's a vertical debit spread with the naked put. It can also be it's a ratio spread, but with uneven, unequal strikes on the short side. There's all kinds of ways you can look at every trade in every way. A good example is a butterfly. Within a butterfly, there's actually 4 separate butterflies hidden into that. So you can morph things and change things to manage your risk or take off some profit or whatever. You see, that stuff is very morphable. And there's no new, it's like Legos. You got so many Lego blocks that you can build anything you want with the Lego blocks.
Mhm.
So that's it. That was all I want to say.
Yeah, good. So let's
So
look at what.
Ken, what's the name of the book that you're talking about, Taleb Nassim?
He's got
Dynamic
several.
hedging.
It's
And
called
it's dynamic hedging. Let me write it down. I have a digital copy. Don't ask me where. And also it's going for $30 for a hard copy on Amazon.
Oh wow, that's a great deal.
Yeah. And I bet
Okay, and is the fake, I keep hearing fake Vega, is that positive or negative? In
it
other words,
depends
what's-
on which way you go, because you can have positive, negative data, Vega, depending on the position itself. So it's a function of time. Remember, when we're dealing with time in the Black-Scholes model or any other pricing model, it's the square root of T, and T is 1 year. So so you got like a 90 divided by 360. Let's just do it that way. And then that will form the T. And so you do the square root of that, and that tells you where pricing is compared to what it would be with a year. Now, if we wanted to do the difference between a 90-day and a 30-day expiration, we just don't have to, we can do 90 over 60. We get a ratio 1.5, and then you take the square root of it, and then you either multiply that or divide by that to figure out which one. Depends on where you're at. It's really simple. And that's something that's Black-Scholes model. It looks freaking scary, but it really boils down to square root of T. Okay, when you're comparing, then and it even spills off into when you start looking at the different strikes. It's a second order. It's the mathematician will say it's a second order function. So in other words, we're working with squares or the reciprocals of squares or square roots or the reciprocals of square roots.
So what's this, y'all? I think I found a place where Ed can take his position off and be okay, right? So right here, the 35.10 at 22 days, right? At 22 days, he could take it off for around 275. Now he may be able to take it off for, the mid price between that. So if he bought it, maybe 260, So let's put that in there and see what would happen if he's close to being able to take it off.
Hey, Bobby, before you do that.
Yeah.
We have to remember he's putting these on 30 days apart, diagonalized, right? So
Yeah.
at 22 days, he will technically have had a naked put on for 8 days.
Yep.
And
Yep.
I don't know that that will fit the criteria of a hedge, right? So I feel like that
Mhm.
puts on more risk. So he might
Yeah.
not make it out to 22 days.
Yeah, he may not make it that to 22 days exactly. So he may be, you may have to, you figure out, hey, that's why we're collecting these credits for it, that we can able to, to be able to close it. So, but I guess, and based on what Evan said is this, guys, look, even though we're running this in the campaign, where are the decisions made? All decisions are made here. This is where the decisions are made, right? I have virtually no risk on. I mean, my theta is negligible. My deltas are flat. I'm using no buying power. You would even ask yourself, do I need to put on the 4-8 today? Right? Do I even need that until I get my theta up? So at some point you got to say, and this is the fun thing. It's kind of fun watching Ed experiment with this. Ed is kind of figuring out what I've been doing for a long time, is free-handing the account. And we said we weren't going to mention it to the children. I don't want to scare everybody, but you kind of get to a place where you go, rather than rudiment, you look at your Greek ratios and you go, what do we need? What do we need? And I look here and I go, the account really doesn't need the Sweet Bobby hedge at this point. It may be a little overkill, Bob, by putting it in at this point. So, those are the fine nuances. And those are when you get to that place to where I think you would be referred to as, the elite of the elite traders. When you can look at 3 metrics and you know what your trades are, and you go, what does the account need? And as I look at these metrics, I'm trying to show y'all the triple nipple in a campaign fashion, but as I look at this with my theta only at 18, it didn't need the 4-8 today. I hope that makes sense. That's kind of a higher level thinking, right? But that's where we all need to get, I believe, is that higher level of what does the account need? What must be fed into the account in order for this thing to function as it should? So I'm so delta neutral, I'm so theta deprived that perhaps it was overkill on my part to do the 4-8, but I knew that, but wanted to show you kind of the campaign mode. Where I want us all to get is to get to that place where you let this one page dictate all of your decisions. It's kind of cool, huh? Yeah, you got negative delta. And Sweet Bobby, is it because both your buying power and delta are low? Yeah, and my theta. See, my theta is blue. And here I am putting on hedges. Well, Bobby, you really don't need a hedge. So if I wanted to compromise today, what I should have done is just done my regular 1-1-1 trade, done 2 tranches of it, and probably not done the Sweet Bobby hedge. Or I could have said, you know what? Why don't I just do a 1-2 today? That's where I want y'all to get. That's where I want you to get. That's a higher level of thinking, y'all. It's simpler because all you got to do is make your decisions from one page. This one page. Now, have I ever ran a $1 billion hedge fund? No, but I am convinced I could run a $1 billion hedge fund with this one page. I'm totally convinced. I don't care if I'm doing strangles or straddles or stocks or whatever. I think from this one page with our metrics, we could use the process to run anything. So I kind of throw that out there. I just want you to know. So when you see me maybe tomorrow go, I'm gonna put on a 1-1-1, but I'm not gonna do the full triple nipple. And you can be, why? Why would you not? It's because the Greeks dictate otherwise. It's very cool, y'all. And before long, you're gonna be like Ed. And Ed is just like, he's kind of floating now. He's like, wow, Bobby, I kind of making these decisions. Ed, talk about that. It's because it's a great thing that you're experiencing.
Well, you put me on the spot there, Bobby, but I'll jump in.
Oh, Ed.
So basically, I'm just doing what you're describing. I'm looking at the front page. I mentioned to you earlier, I'll go ahead and kind of throw it out there for the whole community. it's not perfected yet. In the rally on Friday, my deltas got too negative. My theta drained out of the account. It happened to a lot of people. I want to try to guard against that. You know, we spend a lot of time talking about how we're going to defend our portfolios in a big move to the downside, and sometimes it needs tweaking on the upside as well. So I want to mention that. You know, getting this other part, yeah, this kind of goes back in, you know, weeks ago where we put on naked puts on down days and put debit spreads on up days. It kind of morphed from that, in that I'm not really looking for a direction of the day, but sometimes like today, I'm selling premium because I need to, just like you sold premium, like throw more fuel in the tank. So that's what I mean, and you mean by freehanding. We're just doing what the account needs at this point in time. And again, without going too full in, like if our buying power is up there, you don't want to jam it up to the highest metric just to stuff the portfolio full of theta. But if it needs theta, add more theta. If it needs more protection, add more protection. And again, I can't stress this enough. Quit worrying about the pluses and the minuses of these things and do what the account is telling you to do. And, you know, that doesn't mean that the tranche is not legit. The tranche is legit. Like, feed the machine with the tranche position, whether it's the TND or whatever your own version is of this, you know, 111, whether it's diagonalized or not. I like the diagonalization because it gives us the closer up put debit spreads to protect the further out naked puts, which we've determined in our research is the best way to protect and fuel the account until further notice. So these are just things that happen in that regard. These are, once the portfolio is cranked out with positions in it, then there's this kind of, I hate to say freehand tweaking, but it becomes more doable versus early on in a campaign where you're just laying positions into the account and getting everything built up. So this is a down the road thing. I also think it's go through a few up and downs in the market, a few cycles of up and down before you really go to stepping out there. But all these things come down to management of the portfolio based on that front end page. That's the real bottom line. You know, the front end page does give us all our data. And what that data means to each of us depends on where we are in our journey. It might mean something different to Bobby than it does me, because I might look at mine and say, oh, I'm okay with my metrics. And Bobby might say, I need more. And that's another thing that comes up a lot, and I'm deviating into another thing, but I'll just do this and get off my soapbox. A lot of people are not understanding the campaign nature of what we're doing. And Bobby, I'm glad you mentioned the triple nickel donkey is not just a tranche. It's a means of fueling the account and a means of running that tranche through the life cycle and stacking those one after the other, which creates this campaign or book that we have. It's the same kind of thing. And what we know now is not what we may know down the road. I feel like I know way more than I did months ago, yet I still have more to learn. So it's very exciting. I'll just leave it at that.
Yeah, good job. So, and I would say this, if y'all like this type of stuff, these are the discussions we have in the Muscadine Mafia community, right? So if y'all like this stuff, we talk about these higher level things, right? So where you're kind of getting to this gliding position of your trades where you're, you know, more nuanced and not as rigid with, I've got to do this, got to do this. You know, you're more, as Ed said, you're freehanding the account. You're able to go with what the flow is of the account. So it's just kind of cool stuff. All right, great session today. Kind of deep for a Monday, especially. So everybody take a deep breath. You know, just keep absorbing. Keep absorbing. I think we're all learning. You know, it's not that I've got it perfected. Your Greeks and ratios can be certainly different than mine. Some of you, like Trey is keeping up with his Vega. That's fine. No big deal. Some of you are doing delta Vega ratios. Candy's doing a delta Vega ratio. Some of you may be doing a theta Vega ratio. That's fine too. They're all in the spreadsheet, by the way. All you gotta do is unhide those columns. Those are all in there. I've got them all in there for you and got notes on those as well. I just don't think I need them personally. You may want them. Your metrics don't have to be mine. It's kind of cool though. All right, great session, y'all. Y'all have a wonderful rest of your day. I will see you tomorrow.